If I were starting my investing journey in 2026, I'd first take a moment to pause. Imagine waking up with a clear plan, feeling calm, not rushed, ready to take control of your financial future. That's the first step, thinking clearly before acting. I wouldn't chase hype or get-rich-quick schemes. Think about your friend who bought a trending stock and lost money overnight. I'd do the opposite. I'd start slow, steady, and intentional. Most people giving advice online aren't truly wealthy, so I'd filter out all noise, focus only on what actually works, and ignore flashy promises. My first priority would be safety. Protecting the money I already have before risking any in the market. Without safety, investing is just gambling. An emergency fund comes first. Imagine losing your job tomorrow. Having 6 months of expenses saved would give peace of mind and confidence to start investing without fear. After building that safety net, I'd start investing gradually. No pressure, no rush, just calm, consistent steps, every month. I would not trade daily. Trading may seem exciting online, but most beginners end up losing money. Instead, I'd stick to long-term strategies. Index funds would be my foundation. They follow the economy, grow steadily, and don't require guessing the next hot stock. Simple, boring, and effective. I'd invest automatically every month. Setting it up once and letting it run, like planting a tree and watering it consistently. Even when the market drops, I wouldn't panic. Crashes are opportunities. Think about someone buying during a downturn. They're setting themselves up for huge future gains. I'd diversify. Not putting all eggs in one basket. Owning hundreds of companies protects me from big losses while still letting me grow. I wouldn't check my portfolio daily. Constant monitoring creates anxiety and poor decisions. Once a month, or even once a year, is enough. Compounding is powerful. Time is my ally. I wouldn't rush it. I'd let years do the heavy lifting. Patience is the real edge in investing. The longer I stay consistent, the bigger the results. I'd invest in myself too. Skills, education, and earning power amplify every investment I make. I'd avoid bad debt, credit cards, payday loans. Those destroy wealth faster than any market crash. Lifestyle inflation is a trap. Just because I earn more doesn't mean I spend more. Instead, I'd invest the extra income. I'd ignore financial news designed to scare me. Most headlines are clickbait, not guidance. I'd focus only on my own plan, comparing myself to no one. Everyone's journey is different, and comparison kills progress. Slow and steady wins the race. I'd remind myself daily that investing is a marathon, not a sprint. Risk isn't the enemy, it's mismanaged risk that's dangerous. Understanding this is key to staying calm in down markets. Stocks naturally go up and down. That's normal. Imagine a roller coaster. It's scary until you understand the ride. Long-term thinking changes everything. I wouldn't worry about monthly volatility. Decades matter, not days. I'd keep costs low. Fees silently destroy returns, so simple, cheap investments win over expensive, complicated strategies. I wouldn't chase trends. Trendy stocks or hot markets come and go, but fundamentals endure. I'd focus on that. I'd rebalance occasionally, not constantly. Rebalancing keeps my portfolio aligned with goals without emotional decision-making. Even in bad years, I'd keep investing. Those are often the best buying opportunities. Excitement is the enemy. Boring, predictable investing quietly builds wealth. Discipline beats motivation. Motivation fades, but discipline ensures I continue month after month, year after year. Years later, results appear. Freedom grows, stress decreases, and wealth becomes a tool, not a worry. This isn't hypothetical. Many Americans who started decades ago built real financial freedom using exactly this approach. Small consistent actions matter more than a few big wins. Every month I invest, I plant a seed for future growth. I'd start early. The sooner I begin, the more compounding works in my favor. I'd celebrate small wins, but never get greedy. Growth is gradual, patience ensures survival. I'd keep learning slowly. New strategies come and go, but the basics never change: safety, consistency, low cost, long-term thinking. I wouldn't make emotional decisions based on fear or hype. Calm, rational investing wins every time. I'd trust the process, even when it feels boring. That's the secret most people miss. Every crash, every downturn, is an opportunity. The market rewards those who stay consistent. Index funds grow alongside the economy. Patience lets them do their magic, quietly but powerfully. I'd automate contributions. Set it, forget it, and let time do the work. Diversification is protection. Spreading investments across sectors and companies reduces risk. I wouldn't panic if one investment underperforms. I'd focus on the bigger picture. Investing isn't a lottery. It's a system. Follow it consistently, and results come. Time is my friend. The longer I stay invested, the more compounding works in my favor. I'd not just save, I'd plan. Every decision has purpose, every dollar is intentional. Consistency builds confidence. Knowing I'm following a plan removes stress. I'd keep emotions out. Excitement and fear destroy wealth faster than any bad stock. Even small amounts invested monthly grow into meaningful sums over decades. I'd focus on both money and mindset. Wealth starts with behavior, not just numbers. Finally, I'd enjoy the journey. Investing isn't just math, it's freedom, security, and peace of mind. This isn't financial advice. It's the mindset I'd follow if I were starting fresh in 2026. Simple steps, repeated consistently, create extraordinary results over time. Patience, discipline, and understanding risk. These three beat luck every single time. Automate. Diversify. Stay calm. Let the market work while you focus on life. Celebrate small wins. Don't stress over noise. Trust time and compounding. Your journey is yours. Comparison only steals joy and focus. Boring investing wins. Excitement loses. That's the paradox of wealth. Build skills, grow income, and invest consistently. That's the multiplier effect. Ignore headlines. Ignore hype. Focus on fundamentals, safety, and growth. Even when everyone panics, stay the course. That's how fortunes are quietly built. Don't rush. Don't overthink. Small, repeated actions create compounding magic. Investing is emotional. Recognize your feelings, but don't act on them. Focus on what you control: contributions, expenses, learning, and mindset. Time does more for you than any strategy, stock, or tip. Enjoy the process. Wealth grows quietly, like a tree in the forest. Set up systems. Automate. Check progress occasionally. Avoid emotional reactions. Patience isn't passive, it's active confidence in the process. Every month you invest is a seed for future freedom. Discipline ensures you keep planting those seeds, even in tough times. By the time decades pass, what seemed small grows into real wealth. Risk properly understood is your friend, not enemy. Don't fear volatility, it's the market's natural rhythm. Crashes create opportunities for the patient and prepared. Compounding multiplies consistency. Even modest contributions become life-changing. Your mindset is more important than your money. Think long-term. Excitement fades, but disciplined investing lasts forever. Automated investing removes emotional mistakes. Keep costs low. Avoid complexity. Stick to fundamentals. Time is the silent wealth builder. Respect it, don't fight it. Slow, boring, consistent investing beats every flashy shortcut. Celebrate small wins. Small victories compound into freedom. Income growth should feed investments first, not lifestyle. Diversification protects and smooths out risks. Patience isn't passive, it's strategic strength. Long-term thinking beats short-term excitement every time. Stay calm during volatility. React only when it's rational. Learn continuously but don't overreact. Fundamentals never change. Enjoy the journey. Investing is freedom, security, and peace of mind. Small, consistent actions win over big, reckless moves. Boring choices today create extraordinary freedom tomorrow. Trust your plan. Follow it consistently. Time does the rest. Discipline ensures you don't get distracted by hype or fear. Compound interest is silent but incredibly powerful. Automate contributions, diversify, stay calm, keep learning. Patience, consistency, and smart decisions create wealth quietly. Money becomes a tool, not a worry. Freedom grows slowly but steadily with each disciplined action. Excitement fades, fear passes, but time rewards the patient. Boring, consistent, automated investing builds the life you dream of. And that's exactly what I would do if I started investing in 2026. Calm, disciplined, patient, and consistent. Your financial freedom starts with the choices you make today.